Do you know which stocks pay dividends of up to 30%? Like this video and subscribe to the channel so you don't miss these videos. Nearly 50 stocks paid a monthly dividend in 2022. However, not all of them are worth an investor's consideration. Many didn't offer an above-average dividend yield. Meanwhile, others seem to be at a high risk of reducing their dividends if market conditions deteriorate. That narrows the options considerably. Here's a list of the best dividend stocks to consider in 2023. 5. EPR Properties. EPR Properties is a real estate investment trust REIT. It specializes in owning experiential real estate such as movie theaters, eat-and play venues, ski resorts, and gaming facilities. It secures these properties by signing triple net leases with the venue operators, meaning the tenants bear the responsibility for building insurance, maintenance, and real estate taxes. The COVID-19 pandemic had a significant impact on experiential real estate. Many of these facilities had to temporarily close their doors or operate at reduced capacity. That impacted their ability to pay rent, which forced EPR Properties to suspend its monthly dividend in 2020. However, with vaccines widely available, more people have the confidence to enjoy experiences outside the home again. Because of that, EPR's tenants are catching up on their rent. That allowed this REIT to resume its monthly dividend in July 2021. While EPR Properties already offers an attractive yield, the company could increase that payout in the future as it expands its portfolio. It entered 2022 with lots of liquidity and a strong balance sheet, giving it the cash to acquire more experiential real estate. With movie theaters facing disruption from online streaming, EPR plans to acquire more attraction-related properties that consumers can only experience outside the home. That could improve its dividends' long-term durability. Watch this video to the end so you don't miss the important stuff. 4. Agree Realty. Agree Realty is another REIT. These companies often make for good monthly dividend stocks because they generate recurring rental income. This REIT owns freestanding retail properties secured by triple net leases. It focuses on owning properties leased to essential retailers such as grocery, home improvement, dollar stores, and drug stores, which are less susceptible to disruption from e-commerce or recession. This strategy enables Agree Realty to generate steady rental income to support its dividend. Agree Realty switched from a quarterly to a monthly dividend payment schedule in January 2021. It has an excellent dividend track record overall. This REIT has increased its dividend at a 5.5% compound annual rate over the past decade. That upward trend should continue as the company keeps expanding its portfolio. The retail REIT acquired a record $1.4 billion of properties in 2021, increasing its rental income and dividend-paying capacity. Agree Realty has a strong balance sheet to help finance its continued expansion. That led it to forecast acquiring another $1.1 billion to $1.3 billion of properties in 2022 to support continued dividend growth. Do you know where to buy shares of this and other companies? In the description I left a link to a broker used by millions of investors. Be sure to check it out. 3. Gladstone Commercial Corporation. Gladstone Commercial is a diversified REIT. It focuses on owning net leased office and industrial properties in the U.S. Each represents 48% of its portfolio along with some retail and medical office buildings. This REIT also concentrates on secondary markets because they offer higher investment yields. This strategy enables Gladstone to generate very stable income, which has enabled it to pay a consistent dividend. The REIT has paid more than 200 consecutive monthly dividends either at or above the prior month's level. It offers a high yield with modest growth. Gladstone Commercial has steadily expanded its portfolio over the years by acquiring additional office and industrial properties. It entered 2022 with ample liquidity and solid financials to support its monthly payout and continue expanding its portfolio. Thank you for subscribing to the channel. It really motivates me to make new useful videos. 2. LTC Properties. LTC Properties is a healthcare REIT. It primarily invests in senior housing and skilled nursing properties secured by triple net leases. mortgage loans, and other cash-generating investment structures. This strategy provides the REIT with relatively steady income to support its monthly dividend. The pandemic hit the senior housing sector hard, impacting LTC Properties tenants. Several struggled to pay rent, which led some to file for bankruptcy. However, this REIT used its financial strength to weather the storm and offset some of the lost income with new investments. That's allowed it to maintain its monthly dividend. With market conditions improving as the pandemic wanes, LTC Properties rental income should increase in 2022. Add in its recent investments, and this REIT's high-yielding monthly dividend seems sustainable. 1. Pembina Pipeline. Pembina Pipeline is a Canadian energy infrastructure company. It operates pipelines, processing plants, storage terminals, and export facilities. The company primarily leases the capacity to utilize its assets to other energy companies under long-term, fixed-rate contracts. These agreements enable Pembina to generate steady cash flow. Pembina has a solid dividend history as it has steadily expanded its payout over the years. It should be able to continue increasing its dividend in the future as it completes additional energy infrastructure expansion projects. Pembina has an extensive backlog of secured projects and several more in its development pipeline to fuel future dividend growth. In addition to continuing to support the movement of fossil fuels, Pembina is investing in lower carbon projects. It's working with another Canadian energy infrastructure company on a carbon dioxide transportation and sequestration system to go along with its wind energy assets. It's also exploring opportunities in hydrogen. These moves into cleaner alternatives should help fuel continued dividend growth in the coming years. Don't forget to subscribe to the channel so you don't miss videos about the highest dividend companies.